Hey everyone, Josh here from the REIQ. There seems to be a little bit of confusion out there about the economics of the tenancy market, and so in the context of the rental reforms that are currently coming through, I just thought I'd step out exactly how supply and demand work in this market. So when we look at supply and demand, what we're talking about on the supply side is investors or property owners. So here we've got investors, and then on the demand side, it's tenants. Now, the important thing when we're looking at investors and tenants, and where a lot of the reforms talk to, is about where the rights and responsibilities lie between each party. At the moment, if I was to map out the way that our tenancy laws sort of work, they're slightly favoured towards the tenant. And that's okay because, obviously landlords are still happy to invest in Queensland and are still happy to take that extra little bit of risk and protection for the tenant in order to get their return. The proposed tenancy reforms, though, really moves that dial heavily towards the tenant. Now, the problem with that, and where REIQ have a problem with that, is that that may scare investors out of the market into a fragile market that's already very tight. But let's have a look about what it means for supply and demand. Anyone who has sat through an exciting economics lecture would be familiar with the supply and demand curve. Where we have supply and demand mapped out on a graph that looks at what happens to price and what happens to quantity of goods. So often what we talk about is things like, the price of bananas or the price of watches or luxury goods. In this circumstance, when we're talking about tenancies, we're talking about houses. So if we think about a particular suburb and a family or a multi-generational tenancy that's in a suburb looking for 4-bedroom houses, that suburb may have 10 4-bedroom houses available, and they're currently renting for around $400 a week, which is where we find our equilibrium. So that's where the supply meets the demand, and we know roughly what the price or value of those 4-bedroom houses are in that suburb. Clearly, if someone came in with a $500 a week house that was 4-bedroom and looked very similar to the rest of the stock that was available, they're unlikely to be able to find someone to buy it at that rate because the market is so much further below that. However, if the supply starts reducing, and now so the way that the supply reduces is as the tenancy reforms push all of the rights or a lot more of the rights over onto the tenant side of the equation, what happens is it becomes less enticing for investors to either join the market or remain in the market. So we may see investors leaving the market, as in selling their rental properties. We may see them moving their rental properties to Airbnb and short-term letting, or we may see other investors that are typically investing in new builds that they're looking to rent out. They just may not actually invest. They'll go to another state where they've got more rights and more ability and more control over their investment. So if supply starts reducing, so in the case of people starting to sell, and anecdotally we've heard a number of agencies since these rental reforms have been proposed talking about the potential or that landlords have contacted them about selling. What happens is the whole supply line here moves because supply has been taken out of the market. So let's say that there were 10 properties that were 4-bedroom in this particular suburb. Now there's only 8. And so we find this new equilibrium where $440 a week is the rent. Now the reason for that is because there's still 10 families in that suburb that want 4-bedroom houses, but now there's only 8 houses in that suburb for them to rent. So with higher competition, drives slightly higher prices. So the problem though in the tenancy space, so in the housing space, is that we still have this gap here of 2 properties, this 2-property gap, which means that we're forcing 2 sets of families into another suburb, into another city altogether, into a completely other territory that might mean changing schools, changing jobs, or just their life that they've built up in that community. So this becomes very problematic as supply leaves, so as investors leave the market and they don't get replaced, but it also means that it pushes up rents for people that are already there. This is coupled though in Queensland we have a really strong migration, so interstate migration and international migration coming to the state. So we've actually got this extra demand force that's also coming into the market. However, if the investors aren't there to buy and to satisfy that extra demand, it basically locks the houses in at 8 houses in that suburb, 8 4-bedroom houses in that suburb. So then as the demand pushes up and we get to say D1, The problem is we've still only got 8 houses, which means another rental increase. It means that all of a sudden now we have, it might be 15 families that are now in that suburb, all competing for those 8 properties that are available for 4-bedroom. These are the mechanics, and this is the economics behind why we think these rental reforms are quite dangerous and why we're doing so much to really get the message out there.